As 2024 wraps up and the holiday season kicks in, it's time to plan ahead for 2025. When it comes to investing, having a well-thought-out strategy can be the difference between financial growth and costly mistakes. This year, I'm sticking to a balanced yet dynamic approach, ensuring my investments are diversified, strategic, and built to withstand market shifts. Whether you're an experienced investor or someone looking to start their financial journey, this breakdown of my 2025 investment strategy will give you valuable insights into how I manage risk while maximizing returns. Asset allocation: the big picture of my portfolio. Managing investments is like crafting a well-balanced meal. You need the right mix of ingredients to ensure you're getting optimal benefits. In my case, I view my entire net worth as a pie, where each slice represents a different asset class. In 2025, my target allocation consists of 33% stocks, 33% real estate, 15% Bitcoin, 15% cash, and 4% precious metals and collectibles. This strategy provides a mix of stability, liquidity, and high growth potential, ensuring my portfolio remains strong regardless of market conditions. Understanding where each asset class fits into my financial plan helps me rebalance effectively. If one asset class grows significantly, I can adjust my holdings to maintain balance. This strategy allows me to hedge against risks while optimizing potential returns over time. By maintaining a disciplined allocation, I ensure that no single investment dominates my portfolio, reducing overall exposure to unexpected market downturns. Diversification is not just about reducing risk, but also about positioning myself to capitalize on opportunities in different economic environments. Whether the stock market is booming, Bitcoin is surging, or real estate is appreciating, my strategy ensures I always have exposure to strong-performing assets. Over time, this structured approach helps me build wealth steadily while protecting against unpredictable fluctuations in the financial world. Stocks: the core of my investment strategy. Stock investments form the backbone of my portfolio, making up approximately 33% of my net worth. My primary approach to stock investing revolves around dollar-cost averaging, which means investing a fixed amount consistently over time. This helps mitigate market volatility and ensures I don't panic buy or sell based on short-term price fluctuations. One of my largest holdings is Vanguard's Total Stock Market Index Fund, VTI, which accounts for over 53% of my stock portfolio. This fund provides broad exposure to the entire U.S. stock market, making it an essential component of my long-term wealth-building strategy. Alongside VTI, I have also been increasing my exposure to small-cap stocks, particularly through AVUV, a small-cap value ETF. Historically, small-cap stocks have demonstrated higher growth potential than large-cap stocks, and I believe they have significant room to run in 2025. To add an element of calculated risk, I have also invested in MicroStrategy call options. A few weeks ago, I purchased a December 2025 call option at a strike price of $400, with a break-even of $591 per share. This cost me $19,100, and while it's a high-risk bet, the potential upside makes it an exciting part of my portfolio. Additionally, I continue to hold dividend-paying stocks such as SCHD, which provide steady cash flow and long-term growth potential. While some investors prefer actively trading stocks, I focus on long-term growth using a blend of index funds, small-cap investments, and strategic options plays to maximize returns. Real estate: a reliable hedge against inflation. Real estate continues to be one of the most reliable asset classes, making up approximately 31% of my net worth, just shy of my 33% target. The reason I invest heavily in real estate is simple. It has historically been a strong hedge against inflation. Over time, property values tend to rise, providing consistent appreciation while also generating rental income. Unlike stocks, real estate requires a different approach when it comes to liquidity and management. My personal residence is fully paid off, which many financial experts might argue is not the most efficient use of capital. However, the peace of mind that comes with zero mortgage debt allows me to take calculated risks in other areas of my portfolio. Homeownership, while rewarding, comes with ongoing costs, such as property taxes, maintenance, and insurance. Despite these expenses, owning a home outright removes the burden of monthly mortgage payments, offering greater financial flexibility. Beyond my primary residence, I continue to invest in real estate through VNQ, a real estate investment trust ETF. VNQ has struggled due to rising interest rates, but I remain confident in its long-term potential. While rental properties can be lucrative, I don't currently plan to purchase additional rental properties in 2025. My previous experience in real estate development, where I helped acquire distressed properties and build rental units, has given me a deep understanding of the complexities involved. For now, my focus remains on maximizing returns through existing holdings and passive real estate investments. Cash. Maintaining liquidity for future opportunities. Cash plays a crucial role in my investment strategy, making up 15% of my portfolio. While holding large amounts of cash might seem counterintuitive in an inflationary environment, having liquidity allows me to take advantage of market opportunities when they arise. At the time of this recording, my cash position is at 13%, which is close to my target allocation. My cash holdings are strategically placed in high-yield savings accounts and brokerage accounts that offer competitive interest rates. Currently, I am earning 4.25% on cash through Robinhood Gold, 4% through M1 Finance, and 3.8% through Capital One. Although interest rates fluctuate, these returns provide a reasonable hedge against inflation while keeping my funds easily accessible. For investors in higher tax brackets, municipal bonds can be an excellent option, as they provide tax-free interest income. These bonds offer similar returns to Treasury bills, but with the added advantage of being exempt from federal and potentially state income taxes. While I don't currently invest in municipal bonds, I know several seasoned investors who use them to maximize after-tax returns. The key takeaway with cash is that it serves as a financial safety net, ensuring I have liquidity for future investments and unexpected expenses. Bitcoin. The asymmetric bet with long-term potential. Bitcoin remains one of the most debated asset classes, currently making up 22% of my net worth, exceeding my initial 15% target. Despite its volatility, I see it as a long-term hedge against inflation and government monetary policies. Unlike traditional assets, Bitcoin is decentralized, immune to central bank manipulation, and offers a fixed supply of 21 million coins, making it a scarce digital asset with significant upside. My strategy is simple. I dollar-cost average into Bitcoin daily, consistently accumulating regardless of market fluctuations. I've been investing since it was at $16,000, and with prices nearing six figures, my conviction remains firm. Instead of chasing short-term gains, I focus on long-term growth, as history favors patient investors. Bitcoin's adoption is accelerating, with major institutions, hedge funds, and corporations adding it to their balance sheets. The approval of Bitcoin ETFs and increasing regulatory clarity have transformed previous headwinds into tailwinds. Unlike other investments, I have no plans to sell. Bitcoin is either a generational wealth asset or an experiment with extreme potential. As decentralized finance evolves, Bitcoin's role as digital gold will only strengthen, making it one of the most promising investments in my portfolio. Precious metals and collectibles. A small but important hedge. Precious metals and collectibles make up the final 4% of my portfolio, serving as a hedge against currency devaluation and economic uncertainty. Gold in particular has been a store of value for centuries, and I continue to accumulate gold bullion from JM Bullion, a trusted dealer I've used for nearly a decade. Beyond gold, I also invest in collectibles, including trading cards and luxury items. While some might view collectibles as speculative, certain items such as vintage sports cards and high-end watches have demonstrated strong appreciation over time. The rise of digital assets and alternative investments has further fueled demand for rare, tangible goods. Although I previously invested in silver, I sold my holdings in 2020 and redirected the proceeds into Bitcoin. Looking at the performance of both assets, this move has proven to be highly profitable. If you found this video helpful, smash that like button and hit subscribe, because your financial future deserves it. Got thoughts on my strategy? Drop a comment below, and let's talk money. And don't forget to turn on notifications so you never miss another wealth-building insight. See you in the next video. Stay smart, stay invested.